Welcome to today's discussion on the collapse of Silicon Valley Bank, SVB, and its impact on the tech industry in the United States and beyond. SVB, once one of the most prominent banks serving the tech sector, was closed down by California regulators and placed under the control of the U.S. Federal Deposit Insurance Corporation, FDIC. This marks the second largest bank failure in U.S. history and has sent shockwaves through the tech community, affecting not only companies and investors in Silicon Valley but also those in other countries who have ties to the tech industry. In this discussion, we will delve into the reasons behind SVB's collapse and examine its implications for the future of the tech industry. The collapse of Silicon Valley Bank, SVB, has had far-reaching consequences not only for the U.S., but also for the global tech industry. The impact was so significant that even the former Prime Minister of Israel, Benjamin Netanyahu, spoke out on the matter. In a statement, he described the SVB's failure as a deep crisis for the technology industry and stated that he had been in touch with senior Israeli tech figures to discuss the aftermath of the event. Netanyahu's comments highlight the interconnectedness of the global tech industry and the role that SVB played in supporting tech startups in Israel and other countries. The bank was known for providing financing and other services to high-growth companies, and its collapse has left many of these firms in a precarious position. The implications of the SVB collapse are still being felt today, with some experts warning of a potential domino effect as other banks struggle to fill the void left by SVB's demise. Despite the challenges that the SVB collapse has created, there are some silver linings. The event has prompted renewed discussions around the need for greater regulation and oversight in the tech industry. It has also highlighted the importance of diversification and risk management in finance, with some investors looking to alternative funding sources such as venture debt to support early-stage startups. Ultimately, the SVB collapse serves as a reminder of the fragility of the tech industry and the need for stakeholders to work together to build a more resilient ecosystem. In a tweet following the collapse of SVB, Israeli Prime Minister Benjamin Netanyahu expressed his concern over the impact of the bank's failure on the technology industry. He stated that the event created a deep crisis and that he had been in touch with senior Israeli tech figures to discuss the situation. Netanyahu went on to assure Israeli tech companies that were banking with SVB that his government would help affected businesses overcome the liquidity crisis. In a tweet, he said, "To Israeli companies affected by the collapse of Silicon Valley Bank, we will help you overcome the liquidity crisis and continue to develop your business." This statement from the Prime Minister was met with relief and gratitude from Israeli tech companies who were affected by the SVB collapse. Many businesses had been left in a state of uncertainty and were unsure how they would recover from the loss of their banking partner. Netanyahu's promise of government support was seen as a significant step towards recovery for these companies. The collapse of SVB has left many wondering what led to its demise. According to experts, one of the main factors behind the bank's collapse was the Federal Reserve's aggressive interest rate hikes over the past year. The higher interest rates resulted in an increase in the cost of borrowing, which made it more difficult for SVB to attract new customers and retain existing ones. As a result, the bank's profits started to decline, and it eventually became insolvent. It's worth noting that SVB's collapse is not an isolated incident, as many other banks across the United States have also been impacted by the Federal Reserve's interest rate hikes. However, SVB's failure has had a particularly significant impact on the technology industry, given its close ties to Silicon Valley and its many clients in the tech sector. The collapse of Silicon Valley Bank sent shockwaves throughout the tech industry worldwide. In addition to the United States, SVB also had branches in the United Kingdom and Israel, making it a significant player in the international tech finance scene. As a result, the bank's failure had far-reaching consequences beyond Silicon Valley. Many Israeli startups relied on Silicon Valley Bank for funding, and the bank's closure created a liquidity crisis for these businesses. Israeli tech companies were already facing challenges due to the ongoing COVID-19 pandemic and the country's political instability. The SVB collapse only added to their troubles. However, Netanyahu's assurance to affected Israeli businesses that the government would help them overcome the liquidity crisis was a ray of hope. Many Israeli tech companies expressed gratitude for the Prime Minister's promise of support, and they looked forward to working with the government to navigate the difficult financial situation caused by the bank's closure. According to Gary Tan, the CEO of Y Combinator, the collapse of SVB was an extinction-level event for startups. He further added that SVB was a cornerstone of the startup ecosystem and its demise could lead to a significant slowdown in funding for young tech companies. The sentiment was echoed by many in the industry, who saw SVB as a critical source of financing for emerging tech firms. The impact of the bank's collapse was felt across the technology industry, with many fearing that it could lead to a wider credit crunch for tech startups. While the collapse of Silicon Valley Bank has sent shockwaves across the tech industry, the biggest banks in the United States are unlikely to be affected. According to analysts, these banks have healthy balance sheets and plenty of capital to weather any potential storms. In fact, some experts believe that the collapse of SVB could actually be an opportunity for larger banks to swoop in and acquire some of the startups that were previously banking with SVB. As Craig Piron, a finance professor at the University of Houston, put it, for the bigger banks, it's a good thing. They might be able to pick up some clients and some business from this. According to the article, the White House is said to be watching closely as the situation surrounding the collapse of Silicon Valley Bank, SVB, unfolds. While it is unclear if the Biden administration plans to intervene in any way, the collapse of such a large bank is sure to draw attention from government officials. The impact on the tech industry, which has been a driving force in the U.S. economy in recent years, could have broader implications for the country as a whole. It remains to be seen and how this situation will develop, but it is clear that the collapse of SVB has sent shockwaves through the tech world and beyond. In conclusion, the collapse of Silicon Valley Bank has sent shockwaves through the tech industry in the United States and other countries. Benjamin Netanyahu has assured Israeli tech companies affected by the bank's closure that his government will help them overcome the liquidity crisis. The collapse of SVB has been attributed in part to the Federal Reserve's aggressive interest rate hikes over the past year. Gary Tan, CEO of Y Combinator, has described the event as an extinction-level event for startups. While the biggest banks in the United States are unlikely to be affected, the White House is watching closely as the situation unfolds. As the situation continues to evolve, it is important to remain cautious, particularly for smaller banks and startups that may be more vulnerable to its effects. We urge viewers to stay informed and stay vigilant, and to take any necessary steps to protect their businesses and investments. Thank you for watching, and we will continue to update you as more information becomes available.